pay attention to the chart during the early days of trading, when Ethereum had only been trading on the market for about a year at this point. A spread out double top forms at record highs that are eventually surpassed, due to the influence of a strong and stable uptrend line. The long-term uptrend resumes with almost all the upswing points. Shortly after reaching new record highs, the 400 boundary is under heavy pressure. An instance of a descending triangle technically forming, but it is not ideal because it is found in bullish context in the short, medium, and long term. So it is very natural to see descending triangle price action fail to produce a downward acceleration. Essentially, a large ascending triangle easily dwarfs a minor descending triangle. Here is a bearish reversal, but the proportions are much too distorted to be a strict head and shoulders reversal. After a very minor upswing, a more proportioned head and shoulders pattern does emerge, but in more of a bearish continuation context. It is still useful to use the two upper downswing points as guides for the ongoing downward acceleration by the break near the 800 neckline range. Chart patterns provide excellent landmarks to reference. The 400 boundary, as would be expected, offered strong support. When the descending trend lines are broken, it serves as a gauge of a longer-lasting uptrend, taking hold after moving off the 400 boundary. Attention is fixated on 780 to 800. That offers clear long-term resistance. It is more than just a normal bearish reversal. It is a flatter head and shoulders that provides another set of excellent reference landmarks, namely the descending trend lines and the 640 neckline area. It is also good to see clear reversal candles that usually have normal to high volume. To illustrate a head and shoulders pattern essentially summarizes a gradual transition from a bullish uptrend with higher highs to a new bearish decline with successively lower downswings. Also, the upward trend line from the ascending triangle retains some influence. Often, the right side of a head and shoulders can also include a descending triangle, but that would be a bit of a stretch in this case, though it does still illustrate the right shoulder in a similar capacity, to accelerate the downtrend with the neckline doubling as the horizontal support base of the descending triangle. From March to April, the flat base did resemble a slight outline of the W shape of a double bottom. Now there is a much more defined double bottom forming over the still solid 400 boundary offering support. Bullish volume is also returning quite clearly due to the much lower red volume and the break above the descending trend line. The double bottom is put into doubt as a firm bearish price action and a volume return, with strength in the upper 400s, during what would be the bullish break to complete a double bottom. There is a minor pause in the short term, but remember the bearish background. A minor potential descending trend line can help, as there is a harami under the upper 400s resistance for a potential next leg down. The overall descent continues, and the double bottom is long gone. Attention returns back to the lower 400s, now acting as a lower boundary for a possible triple bottom. However, a descending triangle is more likely due to the increasing bearish sentiment in the short term, going back to the intensity seen in June. It was a bit of a wait from the short-term perspective, but watching day after day, saw a gradual slide prior to the definitive break lower. A similar situation after support is found around 270. A downtrend line is plotted after a harami forms into September, following the minor upswing from the double bottom that didn't materialize. Another descending triangle, but one that would have been more difficult to identify due to being smaller. Identifying the minor downswings from late August into September would have been more difficult. without more extensive experience with candlestick charting. In contrast to the ascending triangle's upper boundary reversing roles to become major support around the 400 boundary earlier in 2018, the most recent descending triangle's 270 to 250 support base provided clear long-term resistance after the old descending trend lines were surpassed in 2019. As usual, many of the prior price levels and ranges are still influential during a major recovery.